Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A counter-to-the-counter key reversal down and bearish engulfing pattern yesterday after the previous session's immediate countering bullish harami. Prices tested once again the topside dark blue highlighted upper time, currently at 107.09 of the late December 2023 to mid-March 2024 bearish Andrews pitchfork, and the April 2020 low at 107.25, as well as down below to the bright red middle time, currently 106.86 of the bearish shift pitchfork, for the same move as the bearish Andrews pitchfork. But this time the bright red middle time gave way and prices pushed lower, closing somewhat emphatically below the middle time. Below we now have the 2020 low at 106.36 and the lesser Fibonacci line at 106.13, before we look at the next below that, the April 2017 low at 105.68. We still have a large amount of overhanging ammunition overhead, stretching from mid-November last year until 3 weeks ago. I'd also previously pointed out the recent bearish bow tie formation. The theory behind this suggests two things. Firstly, to look at which way the market, the moving averages move after crossover to indicate the next direction, which in this case has been suitably downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. Now in this case it would be between the 30th of April and the 6th of May, so right now. Now I'm wondering if this might be it right now. Finally, and I've repeated this often over the last 3 weeks, please pay attention to the crossover of the tines circled on about the 26th of April and the 9th of May. Around and usually a very, very short time after, one may see volatility. Now, right now I'm more inclined to look at the 9th of May as being a better candidate for this sort of action, but keep an eye for what's happened after the one on the 26th. So far today, a lower open, not really doing much right now, but we have seen a small exploration on the downside, though not sustained. Cable, aka sterling against the US dollar. A counter-to-the-counter combined bearish harami and bearish closing black Maribozo yesterday, after the previous session's immediate countering bullish engulfing pattern. This is the first tempering we have seen to last week's weekly key reversal up. Prices reverted back below the gold highlighted flatlining long moving average, currently at 125.47. Not far above the long moving average is the 50% Fibonacci line of the July to October 2023 move at 125.90, being crossed by the newly drawn dark blue highlighted March to date upper bear channel line, currently 125.86. And that's of a possible bear channel, currently 122.91 to 125.86. Now just above this bear channel line, we have the short medium moving average and medium moving average, currently at 126.15.15 and 126.45.45 respectively. Meanwhile, below we have the lesser Fibonacci line at 124.60, and even further below, and in relative terms quite a way below, is the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16, with the June 2020 low at 122.48 below that. Finally, I had previously pointed out the bearish bow tie formation made by the moving averages 4 weeks ago. The theory behind it suggests two things. Firstly, to look to see which way the moving averages move after a crossover to indicate the next direction, which has been downwards. Secondly, between 15 to 20 sessions after crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it will be between the 26th of April and the 3rd of May, so right where we are now. So watch out, we may already be taking part in this. So far today, a small exploration on the downside down to the lesser Fibonacci line at 124.60, but no more than that at this time. Euro sterling, an indecisive spinning top yesterday, which was also an attempted bullish thrusting pattern, coming as it did after the 5 previous bearish black crows. Prices punched back up through the following. The broken dark blue highlighted upper time, currently at 85.48 of the November-December 2023 bearish shift pitchfork. The combined December 2022 low at 85.45 and December 2023 low at 85.47. And the lower trend line, currently 85.39 of the purple highlighted late January to date expanding wedge pattern. And that's currently 85.39 up to 86.51. However, the market failed to close over these, ending for a second consecutive time below the purple lower trend line. Below there is some support from 2 weeks ago down at the 85.19 level, but better may exist at the bright red neckline extension of the May to August 2022 Head and Shoulders continuation pattern, currently at 85.06. All in all, as I said yesterday, this possibly could be becoming quite a decisive move lower if it is sustained. Now, so far today, we've had a lower open, but a move up through the lower purple trend line to December 22 and December 23 lows before coming back down to lower purple trend line again. It seems some in the market are not quite ready to be decisive, not just yet. US dollar against the Japanese yen. Accounts combined bullish harami, bullish double, and bullish closing white Mariposa yesterday after the previous session's exaggerated range of about 3.5% of the US dollar Japanese yen value that only ended up with an immediate countering bearish harami and outside day. Now, prices rose up and closed just under the previous session's open. Overhead we have the May 1990 high at 159.61 and the purple highlighted middle time, currently 160.02 of the large February 2022 to January 2023 bullish shift pitchfork. And down below, under the June 1990 high at 155.78, we have the red highlighted middle time, currently at 155.20 of the more recent July to December 2023 bullish Andrews pitchfork. It was still, after all this, yesterday was still the second highest close this century. Now, so far today, very little apart from a tentative exploration on the upside, which hasn't gone really anywhere. US dollar against the CNH, the offshore Chinese yuan. A third countering bullish harami yesterday after the previous session's counter bearish engulfing pattern and bearish opening black Mariposa. Now, the base of the action was on the dark blue upper trend line extension, currently at 723.84, the recent ascending triangle pattern, with just below the rising long moving average, currently 723.58, and the short medium moving average, currently 723.13. Meanwhile, on top, we have the dark blue highlighted broken lower trend line extension, currently at 727.61 of the same recent ascending triangle. Prices ended up closing right on the flatlining short moving average of all places, and that's currently at 725.39. Now, all of this is in the shadow of last month's monthly key reversal up here in the spot USD CNH, the offshore Chinese yuan. However, that is not all. As though I do not show it here on this chart, there are also monthly key reversals up in March in USD CNY, the spot onshore Chinese yuan, plus monthly key reversals up in March for the USD CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if we have follow-ons, and this is where the rub is. As 2 weeks ago, we saw not just a weekly key reversal up in spot USD CNH, but also in the USD CNY, the onshore Chinese yuan. And that's the 1 month NDF as well as the 1 year NDF. Altogether, quite an achievement. Okay, so 3 weeks ago, I laid out some ideas for potentials below for the then breakout lower from the ascending triangle pattern. Thus, a primary target X is down in the 716.05 zone with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I'll keep this or these targets on my daily chart. as we've already had a false break lower, and more recently we've had what looks like a false break higher as well. So as I say, I'll keep them on for now, but I'm happy to retire them in a heartbeat. Yet I'm also mindful of the potential topside now from the more recent moves higher. So for good order's sake, I've marked for now a primary target X2 topside for a continuing move higher at 730.05, and a secondary much harder to reach target X3 up in the 732.80 area. Now so far today, a reactionary move back down, still within the dark blue trendline extensions, and looking like a bit like a fourth countering bearish harami right now. US dollar against the Mexican peso. A reactionary bullish harami yesterday after the previous two bearish sessions. The market tried to dip down through the flatlining medium moving average below, currently 1693.70, but stopped short of testing it, instead pulled higher over the March and April 2016 lows at 1709.23 and 1703.89 respectively, and over the broken dark blue highlighted upper tine, currently 08.93, and that's of the December 2023 to January 2024 mildly bearish shift picture, closing just above it. Unsurprisingly, the rise halted just short of the gold highlighted overhead flatlining long moving average, currently at 17.1740. Now over all this recent action set in April, we've got a setup in April to, had one to be a possible monthly key reversal. Thus, if we closed either last night over 1704.90 or under 1653.10, then we'd be on. Now anything in between, we'd have ourselves a lesser outside month. Well, we ended up with a monthly key reversal up after all that. So far today, a test up to the overhead gold highlighted long moving average, but also a pullback lower away from it, though not far enough to threaten the March 2016 low as yet.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.